Welcome to today's market report. World stocks climbed higher on Monday as investors digested new optimism from the US Treasury's top economist that inflationary pressures should ease in 2022 due to weaker demand for goods, easing supply bottlenecks, and a receding coronavirus pandemic. Wall Street closed higher on Monday, coupled with an earlier rise in European shares that helped stabilize investor sentiment after a series of volatile sessions. In a statement released alongside the Treasury's quarterly borrowing estimates, Assistant Secretary for Economic Policy Ben Harris said he expects energy prices to stabilize in 2022, but geopolitical instability could push prices higher. Still, investors said the backdrop for equities remains uncertain as other central banks tighten policy. The Bank of England is expected to hike rates again on Thursday, and another jolt higher in oil prices adds to inflationary worries. The Pan-European Stoxx 600 index rose 0.72%. Lunar New Year holidays made for thin trading conditions in Asia. MSCI's broadest index of Asia-Pacific shares outside Japan closed 1.11% higher. Oil prices ended January about 17% higher in their biggest monthly gain in a year, boosted by a supply shortage and political tensions in Eastern Europe and the Middle East. Brent contract was 0.8% higher on the day, settled at $89.26 per barrel. WTI crude rose 1.5% to close at $88.15 per barrel. Data showed Eurozone economic growth slowed quarter-on-quarter in the last 3 months of 2021 as expected. China's factory activity slowed in January as a resurgence of COVID-19 cases and tough lockdowns hit production and demand. US 10-year Treasury notes was up 0.9 basis points to 1.789%. Cable is trading around 134.50, whilst the euro-dollar struggles to stretch the previous day's bullish show, retreating towards 112. The risk-on mood favored Wall Street benchmarks and dragged down the US dollar index.
This is today's market news. Thanks for listening. We'll see you next time.